Welcome, welcome, welcome. I'm X. We here now. So, another bloodbath day in this Trump session. Just look at it. Just look at it. The only thing that's up is XRP. That's the only thing that is up. What about some stocks? Man, I don't know how y'all feeling, but I'm a little nervous. I'm stressing. This is my first uh, cycle in crypto. Like I said previously, I only started trading last February. Well, I started to learn how to trade last February. This is this is crazy. This is crazy. And they love to say this is what we voted for. No, we didn't vote for this. We did not vote for this. Like all last year when I was learning how to trade, it was beautiful. Like this is all last year stuff. Like we was in a big range last year. This is what February. No, this is still October. Let's see January. Look at here. Look at here. Look at here. Look at here. The end of January. The end of January shot up into the range. So looks like we're gonna do the same thing. Well, we have been doing the same thing in a sense. Shot up in November, started the little range a little bit. So I know I'm ranting already, but I just have to say this because I need to talk to somebody. I need to talk to somebody. With this Bitcoin, just by looking at Bitcoin, you got some areas where price can head to. Um, price can always head back to this EMA. Can always head back to this EMA. And I'm guessing if it does get back to the EMA, it'll be up in somewhere around what 67. Yeah, between 67 and 71. I think price is going to come to. And then that's when I feel like it's going to bounce back up. Bounce back up. Let's look at others. This is all crypto except for the top 10. Look what it's doing. Look what it's doing. Look what it's doing. Let me reevaluate, move this around. Yeah, that looks better. That looks better. So, on others, on the 3 day and others, it actually already went past the 200-day EMA. So, I don't know. It's showing a reversal right here. It is definitely showing a reversal. But to confirm the reversal, it has to cross upwards on this trend line, this 3 day trend line right here. And on top of that, it also has to break structure right up in here as well. Yeah, so yeah, this is going to be crazy. Let's look at the where's the 25th at? I need to go to the daily. 25th. That looks good on the daily though. That looks good on the daily. Boom. Uh, yeah, this looks real good on the daily. This looks real good. The fair value gap hasn't been touched much. I know I said this in the last video, but it hasn't been touched much, meaning that it's a good chance for a reversal. for an actual reversal, and how all of you know the other YouTubers and people of interest like Kathy Wood and these other people, they're saying the 25th is when everything turns around. So fingers crossed. Let's just hope that it is what it is. What does total look like? Total crypto. Yeah, it bounced off there as well. It bounced off there as well. But we won't be sure until this trend line is actually crossed. Actually crossed. Go back to the 3 day. Yeah, it's actually crossed. So back to the actual video on the biggest trading mistakes that beginners can make. Um, so when I first started trading, I made many, many, many mistakes in the trading community. Lost money, got frustrated like I am right now. Even thought about quitting. He even thought about quitting. I mean, I can't even think of the words I need to say right now. It's just frustrating. But hey, if you just starting out, here's some biggest trading mistakes that most beginners like myself make and how to avoid them. So, first one on the list, which I think is one of the biggest ones, is no trading plan. You need a trading plan. Jumping into trades without a clear strategy or reason, that's like the biggest mistake that you can make. And why is that a problem? Because without a trading plan, it's basically just gambling. Just like how everybody think trading is, oh, that's gambling. Why would you do that? Why would you do that? Just gambling. I mean, you don't know when to enter or exit or cut your losses. As traders, we need to know these things. We have to know these things. So, moving on. Over leveraging and ignoring risk management. This was a big one for me. It's going to be a few in here that that are big for me. Over leveraging, trading with too much leverage, or risking a big portion of your account on one trade. And why is this a problem? Because one bad trade can wipe out the entire account. Now, how to avoid it? Remember, stick to at least 2% risk per trade. That way, even if you get on a losing streak, you still have capital to trade. Still have capital to trade. All right, on to the next one. Chasing trades and FOMO. Chasing trades and FOMO. Yes, I said it again. The mistake is that you're seeing a stock or crypto or whatever shooting up, shooting up, shooting up, and then you buy in late. You basically buy in at the top, and and that's a problem because by the time you enter, the move is usually over, and you get caught in the pullback because the people who were in that trade now they are taking profits. And what happens when they're taking profits? Price pulls back. That's a good one. That's a good one. So, not understanding market structure. Woo! Market structure. So, trading blindly without recognizing trends, support, resistance, or even market cycles. This is another big one because if you can't see the support, resistance, or trends, or even the market cycles, how do you expect to make money? How do you expect to make money? I mean, so the problem is that entering a trade without understanding the bigger picture leads to poor timing and unnecessary losses. And this is another reason why I'm a big advocate on swing trading. Because when swing trading, you see the bigger picture. No matter what, you see the bigger picture. Now, how to avoid this? Learn price action, trend direction, and key levels. Basically, how I trade. I'm not saying you have to follow everything that I do. However, my strategy is based on price action, trend direction, and key levels. Fair value gaps. Key level. This is the key level. This is the key level. And this is why price came back to it. This is the key level right here. The key level. And that's another reason why I believe that it's going to reverse again. It's going to reverse again. So, revenge trading and emotional trading. Whew. If you're scalping and day trading, you get this a lot. So, taking a big loss and immediately trying to make it back with an impulsive trade. Why is that a problem? Because emotional trading leads to bigger losses and bad decisions. How to avoid this? Heck, I just went through this about 2 days ago when I lost the $2. I had to get off the computer, take a nap. Just take a break. After a loss, just clear your mind before entering another trade. Your psyche is everything. It's everything in trading. All right. Ignoring trading psychology. Thinking trading is just about charts and indicators without controlling emotions like greed and fear. There's also a meter for that. So it's a problem because even with a good strategy, you can't handle losses or stick to your rules. You will fail. I, I will bet money on that you will fail. And how to avoid that? Just work on your discipline, patience, and mental resilience because trading is 80% psychology and 20% strategy. Remember that. It's an 80-20 thing. Next one. Not backtesting and practicing before trading live. I repeat, don't make the same mistakes I made. I thought that I can trade live within 2, 3 months. Now, I did teach myself how to trade. So if you guys decided to watch me and follow me, decided in 2 to 3 weeks, 2 to 3 months, you're you can trade profitable, then hey, I'm not getting in your way. But the mistake is jumping into real money trading without testing your strategy first. You have to be comfortable with your strategy because your strategy is your best employee. Your strategy is your best employee. Why is this a problem? Because you're just trading blind. Without testing, you don't know if your strategy actually works. How to avoid this? Back test your strategy on historical data and trade in a demo account first. The historical data, you can only get that on the essential plan on TradingView. That is the bar replay mode. That's why I say, hey, if you can afford it, spend that $15 a month and just understand it. Just get good at it. Just get good at it. I spent hours and hours and hours on these charts. People always say, "Well, I don't have time to be looking at charts all day." Well, clearly, you don't want to stop working for somebody else. That's clearly what it is. Because I took it like this: if somebody can make $1 million in one trade, I can too. I'm not saying that I can make that today, tomorrow, next year. All I'm saying is that if I stick to it, keep practicing, and keep practicing, I can do it as well. Now, my biggest issue, my biggest issue, I've tried to do this countless of times. I've tried it, I've tried it, I've tried it, I've tried it. It's just like in school, or when I was in school. Not journaling trades and tracking progress. Not journaling is the biggest thing for me because journaling requires you to go back to it and review and review and review. I don't learn like that. Uh, the way I learn is just keep doing it, keep doing it, keep doing it, and keep doing it. If that makes any sense at all. So the mistake is not keeping track of your trades and the mistakes and the patterns. Why is this a problem? If you don't analyze your past trades, you keep repeating the same mistakes over and over and over and over and over again. How to avoid this is to use a trading journal to track your wins, losses, emotions, and setups. Learn from your mistakes. How I learn from my mistakes is kind of counterintuitive. It's just keep making the same mistake. I don't understand why I do it. I truly don't. But that's probably why I stayed on paper trading for so long and spent so many hours doing it because I did not use a journal. So please, guys, use a journal. It'll only help you in the long run. It'll only help you in the long run. So another one is trading too many markets at once. Trading too many markets. The mistake is trading stocks, Forex, crypto, and commodities all at the same time. Why is this a problem? Because each market behaves differently, and you can get overwhelmed and make careless mistakes. How to avoid this? Master one market first. Once you're consistently profitable, expand into other assets. So, I found a little cheat code that works for me. For crypto, I've learned that if you just learn Bitcoin, if you just learn Bitcoin, you could potentially trade all other crypto. Why I say that? Because crypto follows Bitcoin. Bitcoin is king. Bitcoin is number one. Also, gold and Bitcoin is similar. Gold and Bitcoin is similar. And I believe I'm still learning commodities. I'm still learning commodities. I believe that where is yes, I believe Bitcoin, gold, silver, copper. I think those all. mimics each other. Let's see. Let's see. I was wrong. Hey, I was wrong. I can admit to that. I was wrong. Now, I forget which one. I would have to get back with you guys. Lags, Bitcoin, and vice versa. But now I do know that S&P 500, VU, all of those, um, they ride with Bitcoin just because Bitcoin is such a um, it mimics the stock market in a sense. It mimics the stock market in a sense. I can go deeper into that if you guys like, but I'm just gonna leave it at that right now. Last but not least, expecting to get rich overnight. Whew. Now you can get rich overnight. You can get rich overnight. However, it doesn't always happen like that. That's what you call being lucky. Like these meme coin people, they're getting lucky. So the mistake is thinking trading is a quick way to make money without putting in the work. I put in over 3,200 hours last year. Every day, I spent at least 8 hours learning. From February to the end of the year last year, I spent almost 8 hours, at least 8 hours a day. Yes, my wife hated it. Yes, yes, but it's all going to be worth it this year. It's all going to be worth it this year. Um, why is it a problem? Unrealistic expectations lead to risky trades, impatience, and quitting too soon. How to avoid this? Treat trading like a skill-based business. It takes months or years to become consistently profitable. Remember that. Remember that. So most traders fail basically for the simple fact that they don't avoid these mistakes. And if you can focus on risk management, discipline, and strategy, you will be ahead of at least 90% of all beginners. And that's just that on that. So, uh, this will be the end of this video. Quick question: which mistakes have made before? Drop a comment below and like and subscribe. And again, please critique. Please critique. That's the only way I get better, so that you can become better. All right. X out. On to the next one.